Nick for Simple Stocks, looking over the futures levels for Wednesday, 11:15. We have the S&P futures. It's very easy on the upside. We're cutting across resistance from in the S&P's case from September and perhaps August. In the NASDAQ, we go way back to the summer of this year and the summer of last year, 2022. So pretty old scars there. On the S&P, we were looking at resistance at the high of today, which was a spike on some headline, 45.40, nice round number. I don't go long there. I go long on a dip away from it and maybe curling back into it. Or once they break out, I buy on the dip to ride it up higher. Meanwhile, we do have very ginger support, and I think the easiest line to pick is 4,500. It's actually a little bit higher, but let's go with 4,500. Lose that, and you start losing volume. And if you lose 44.89, you might lose volume completely. Nothing here. So you go, it's a quick trip down to the base. So 45.50 or lower. All right, so these are the numbers on the ES. Let's go to the NQ. Very similar structure, whereas if you lose the recent ginger lows, you have a quick trip lower because there's no recent volume. The high of the day is very easy to spot on the NQ. That would be 16,049. You have an interim high at 15,930. And as far as support, you don't have much. If you lose, I think, convincingly 15,793, you're going down to 15,640 or lower inside this white box. There are very significant levels, but they date quite a ways back. So for the short term, we don't have a lot of conviction because of these long sticks that we got. The RTY made some really good progress, and if you zoom out, you can see higher lows, higher highs. So that hasn't happened for long, and it hasn't happened a lot yet. So I'm not too convinced. We have descending scallops on the way down. We have ascending ones here. So we have higher lows, higher highs. I would want to draw. Like, okay, we're making progress on the RTY from here to here. So yeah, one can say we have a pattern, but just two humps doesn't make a pattern. So let's see if they'll buy the dip and they make a higher low and then curl back and make a higher high. So the numbers we're talking about, the higher high will have to beat 1834. And I think we have an interim buyer at, so I hesitantly say 1775 because I don't think they're that strong. A little bit stronger at 1752. Much stronger anything below 1727. Okay, and that would still be okay and in the hands of the bulls. All right, so on the YM, I believe it's a similar situation. But let's zoom out here to a 2-hour chart just to show relativity. Yes, everything is a breaking out, and that's common to all the indices now. But if you look left, they have targets they need to beat, and they're a little bit old, but they're pretty harsh. For example, on the YM, the high for today, by the way, this is the Dow, 35,102. If you look left, look how many tails it has to fight. Look at all these failures. And the highest one was incredible, and that would be at 35,362. I wouldn't want to get long into that. I don't care how big of a measured move this inverse head and shoulder has, and it is huge. It's like 35.9. But I would engage long on a dip. The deeper inside this long stick, the better. Now, I wouldn't short because we're here, but I wouldn't want to chase blindly. Buy the dip. That would be my statement on this one. CL, that's for crude. I'm still bearish of crude. I told you it's lower highs, lower lows until they prove you otherwise. Why? So every rally so far they come back and have yielded a lower low. So they're coming back. They're retesting for another lower low. So let's zoom in and see if we can get you some lines that are tradable to know what's happening when. So we have a good buyer at 75, 45, 48. But the tails extend. These are 2-hour tails, so they're legit. 74.91. Let me tell you, if we lose that, 74.91, we can probably end up in the low 70s, maybe lose the 70s and be in the high 60s in a series of lower lows and lower highs. In other words, this dip may not have stopped yet. They're selling rallies into the moving averages. Be careful with that one. GC, it's a little bit better, but it's still in the CL mode, lower highs, lower lows. If the GC gold They do have strong buyers. If by some freak nature they lose 1948, that's warning one. And then if you come down and lose the recent bounce at 1935, I think it's going to the high 1800s. Conversely, a really good progress statement would be done by the bulls would be to take out 1980. It's actually 1979.2, but let's round it up to 1980 because there's a little wick right there that might extend there. That may bring you an attempt at this giant fail candle of the 3rd, okay, November. Now, silver, which I'm long, and green in one day, is a little bit better than gold. It already took out its recent fail, and it is already tackling these prior fails. So it's made more progress, and it is at the mouth of the inverse head and shoulders, which could promise this zone up here, which is $25 and more. Now, I don't say it's going straight to 25, at least it's trying to. I think the best trigger there would be 23.9. 23.9, I think you can clear this and tackle that. Any dip, I would buy the dip into 23 or 22.9 to curl back and push through. I'm long, I gave it time. I'm green, 10-15%, so I used SLV. I may ride it out. I'm not adjusting it or booking it right now. All right, we've run through all the majors. Stay safe.